this is the way it is now with these snap lockdowns. It doesn't make it any easier for those businesses, but the difference this time around is that there's no JobKeeper to fall back on.
Yeah, Peter, good morning. Look, you couldn't have scripted this worse, frankly, when it comes to those businesses who are really already potentially on the line. We saw some interviews over the weekend, of course, in the different national dailies talking about the businesses that were going to have to finally lay some staff off after that support was finishing. It's got to finish sometime, but and look, the government couldn't have known, of course, that the lockdown was coming or that a COVID outbreak might happen in Brisbane. But awful timing for those businesses. I have argued for a while that one more round of tapering might have made sense because these are contingent on revenue numbers. They only would have gone, that money would have gone only to businesses that were continuing to struggle. There are other ways to make this work. Unfortunately, in the circumstances, the two have coincided at the worst possible time. There is some hope, of course. This is a short lockdown, terrible timing pre-Easter for those with Easter travels, tourism industry operators, all that kind of stuff. But we're hopeful this can be short, sharp, and back to normal. And hopefully we're all, businesses and consumers alike, used to this and can get back to normal pretty quickly come the end of the lockdown, hopefully later this week.
The bugger is, though, that, Far North Queensland, they were really banking on this weekend, Easter holidays, and now they're not going to get it, and then they've missed their opportunity, their big holiday opportunity for a while. Your heart aches for them.
Yeah, it's awful, mate. And again, what do you do? The circumstances are the circumstances.
Yeah.
We've got to deal with what we've got to deal with. It is just a terrible shame that the coinciding, as you say, of JobKeeper ending, this lockdown happening, vaccinations not yet up to speed. Hopefully, I'll cross my fingers and touch wood, this is the last time we have to confront such an outcome, because hopefully next time around, although we don't have another one, which is the best outcome, or there is sufficient either economic recovery and or vaccinations to get us through.
Let's have a look at the share market. I tell you what, you are a wise investor, Scott, because we've been talking about this for a while, the buy now, pay later sector. You've always had reservations about it, particularly Zip, Afterpay, etc. Tell you what, they've come off the boil, haven't they? Is it gone?
They have, mate. It's interesting, isn't it? Look, these guys are at a 3-month low Afterpay in particular. It's largely to do with the broader sector falls. We know since November last year when the vaccination was announced, ironically, we talked about the vaccination impact on businesses, on investors. The tech stocks really haven't recovered over the last 3 or 4 months since that vaccination news came through. I think investors were probably too optimistic at the time. May well be too pessimistic now on some of these companies, by the way. I think Afterpay has a long way yet to run as a business, but it is a reminder that a lot of expectation, a lot of sentiment, a lot of, dare I say, hype can be in share prices from time to time.
FOMO.
And over time, right, exactly. You got it. And, when it's going up, everyone wants to be on board with it. Even if it's successful, at one point, I think it probably still is roughly the case, it's about 1/5 of Amex's, American Express's total market capitalization. I'm going to say it's a little bit ahead of itself. And if you think about the breadth, the history, the number of sheer Amex cards, for example, in operation right now.
$100 still too high for Afterpay, you think?
I wouldn't be buying it at the current price. Plenty of people would, by the way. So I'm not going to say I have the only answer on this one, but I'd be cooling my jets a little bit.
Hey, just quickly too before we go, it looks as though the trade war involving our wine industry is going to continue. Treasury wines, I was reading yesterday, it's going to be a 2-year problem for them to get over as they redirect their traffic. What do you make of that? And is that a stock you still stand by?
I do. I own and like Treasury wine estates at the current price. Now, if you told me at $20 there was going to be a Chinese shutdown and tariff imposed, of course, I would have sold at that point. The reality, of course, with any investing is once the news is known, it's already in the share price. So you can't react to today's news yesterday. You've got to take what you've got. At 11 or 12 bucks, I think Treasury is a pretty good deal. I think wine will resume sale into China in the fullness of time, whether that's in 6 months, 12 months, 18 months, 2 years, I'm not sure. China, of course, have officially extended the tariffs for 5 years, but we know this is a geopolitical fight, not a trade war. And so if and when those relations do thaw, I expect there'll be some wind back. I'd be very, very surprised if it lasts 5 years. At the current price, though, I think, the growth elsewhere is probably decent value, and you're almost getting a free option on China. If it doesn't come back, the shares aren't unreasonably valued. If it does come back, the shares are cheap.